Time to get a move on. Let's understand the business outlook, the retail expansion plans and order book for when it comes to KEI Industries. Anil Gupta is the Chairman Managing Director, now joining us on board. Thank you so much for taking time out, Mr. Gupta. Now, you've been very optimistic when it comes to expanding your retail franchise via the dealer distribution base. How do you see the retail business growing in FY22?
We have already, good morning. We have already indicated in our earlier call that we expect to grow by around 35% in the retail distribution this year. Although we feel that April and May was an aberration because of the lockdowns and most of the retail outlets were not working. But, going forward, this month onward, we are seeing a good boost in the retail expansion. And we are hopeful that we should be able to grow by 35%. As on today, we have around 1,700 of dealers with us, and we are expanding pan India. We have added number of marketing people for retail distribution all over the country. So far as order book is concerned, our order book stands at around 3,000 crore rupees this year, at this moment.
Order book is 3,000 crores at the current juncture. Can you break it down for us with your individual segments and also walk us through some of the key orders that you're likely to bag in the domestic market?
I can give you the breakup of basically these are institutional orders like cables around 1,200 crore, EPC projects around 1,000 crore and extra high voltage cable around 670 crore rupees, and rest is miscellaneous export orders. So far as retail is concerned, there is no order book in retail. The order comes and executed within maximum 1 week.
Sure. Anil, you also plan to cut down the EPC business, as we understand, from the earlier levels of about 1,000 crore rupees to now 450 to 500 odd crore rupees, and utilize the money, as we understand, to channelize the retail segment's growth. What's the rationale really over here?
Because in EPC business, the payment cycles are long, and we want to make it more cash surplus business. That is the reason we are more drifting towards retail. And so far as bringing it down to 450 to 500 crore, we are on that path. With the 1,000 crore order book at the moment, we can maximum achieve 500 crore billing in a year, because these orders are typically executed over a period of 2 to 2.5 years.
I understand your capacity expansion plans as well for the fiscal have been pushed back because of the second wave?
Yes. So we were planning to start our expansion from April this year, but again it is pushed back by around 3 to 4 months. But we are on the track, and we should be starting the expansions with a new project by September or October maximum.
Okay, fair enough. Are you seeing a shortfall in your exports due to the absence of large orders, and do you think it can be compensated by the domestic market orders?
Yes, there is a shortfall of export orders, mainly because we are not able to travel, and due to not able to travel, we are not able to develop new customers. Whatever orders we are getting is from the existing customers. The 2021 base was high because of one big export order of Dangote refinery in Nigeria, around 450 crore rupees order we had executed. But otherwise, in normal course, we were getting an export of around 500 crore rupees a year, and which we are hopeful that this year also we should be able to sustain it. And as soon as the travel opens, our teams are there to travel and develop new customers. Even we have a few people posted outside India. They are also stuck because they are not able to move around, and customers are not receptive to receiving the people.
Okay. Now, how are you looking at the impact of the rise in commodity prices, particularly copper? Are there any price hikes on the anvil?
In retail, we are reviewing the prices every 15 days and revising the prices or list price upwards every 15 to 20 days. So far as institutional business is concerned, these 40 to 50% orders are having the price variation clause. Balance which are on the firm prices, we are either having the stocks or booking the metals so that there is no impact on our margins. And so far, we have not seen any adverse impact on our margins in last 7 to 8 months since the time this commodity markets started rising.
Okay. Also, Anil, wanted to understand your current net debt stands at about 84 odd crore rupees, and the net debt also includes acceptances which stand at about 407 crore rupees. What's the plan that you have to reduce debt on your balance sheet going forward?
I hope that by end of this quarter, the second quarter, we should be absolutely debt free. Even net debt should also come down to zero. However, as and when the capex starts, there will be some debt, but it will be very marginal as compared to what net worth we have. So we don't see any major impact of the debt on our balance sheet. And there will be good revenue generation, which will also be the cash surpluses, which will help us in improving our capex without debt.
You've given a projection of 17 to 18% revenue growth for FY22 with sustainable margins of 11% as well, and a similar range when it comes to revenues and margins in the consecutive years too. You think you'll be able to stick by with these projections, or could there be a derailment?
We are confident that we will be achieve these these projections. And in this year as well as next year, the only exception can be if there is a severe pandemic wave again, which may impact the business. But otherwise, as on today, we are not seeing any impact of the growth projections in this year as well as next year.
Anil, great to have you on the show. Thank you so much for taking the time out and speaking with us today on ET Now.
Thank you.